Doesn't a stimulating conversation about Indiana property tax deductions sound like a heck of a good time? I know what you're saying. Oh my gosh, no, it doesn't. But it's an important conversation to have, because if you don't know about some of this information I'm about to share, it could cost you a bundle. Hi, this is Mike Dempsey with Indy Top Homes and the F.C. Tucker Company right here in the central Indianapolis metropolitan area. If this is the first time to my channel and you want to know more about living here in the heart of the Midwest, be sure to hit that subscribe button and the notification bell. You'll be notified whenever I post a new video, and subscribing is definitely appreciated. Indiana property tax deductions, an important conversation to have. You know, the old saying is, ignorance is bliss. Definitely not in this case, because if you're not aware of some of the deductions that you might be eligible for, it could cost you a bunch of money, like it did one of my clients not very long ago. Cost him about $80,000.
Oh my gosh.
That's what I said, $80,000. And I'll tell you about that story in just a couple minutes. Hey, this short video is not intended to be legal advice because I'm not an attorney. It is intended, however, to be informative and money-saving. So if you want to know more, pause this video, go grab yourself a cup of coffee, come on back, settle in. I promise I'm not going to take much of your time, and I'm going to get started right now. I get contacted regularly by phone, by email, by text from people who are thinking about moving into the heart of the Midwest here, or people who are already here just thinking about making a move. If you're even considering about moving in or making a move here in central Indiana, I welcome all of those inquiries. You can reach out to me by phone, by email, by text. I'm just happy to see how I can help. Property tax deductions. What could possibly be worse than listening to a real estate broker talk about property tax deductions? Well, I'll tell you what could be worse. Paying the tax man a whole lot more money in property taxes than you have to. That would be considered a little worse. So give me your attention for just a couple minutes. Here in Indiana, we pay property taxes based on the assessed value of our property. The assessed value is assigned by the county assessor, and it is a value that is used to measure applicable taxes. Now, assessed value is typically a percentage of the fair market value. Now, the assessed value is based on condition of the property, property features, square footage, market conditions, things like that. And here in Indiana, we pay our property taxes in two installments, the spring installment in May and the fall installment in November. Now, my intent here is not to make you an expert on assessed property values, how they're calculated, or even debate how fair assessed values are. My intention is, however, to help you better understand how you can reduce your property tax liability in the state of Indiana. And one of the ways that you reduce your property tax liability is to take advantage of the property tax deductions which are available to you. And here in Indiana, there are several property tax deductions, but in order to take advantage of those deductions, you do have to meet the eligibility requirements. Some of the more common property tax deductions are the homestead deduction, the mortgage deduction, the veterans deduction, and the over 65 deduction. Now, there are others that are available, and you do need to meet the eligibility requirements. And I have attached down below, below the video, a PDF document that describes the property tax deductions that are available and the eligibility requirements. Now, for the purposes of this video, I want to focus on the homestead deduction. The reason is everybody who owns a property and makes it their primary residence here in the state of Indiana is due one homestead deduction. And not taking advantage of that homestead deduction can be an extremely costly mistake. So, hence the story that I referred to earlier in this video. Let me tell you about that right now. I recently listed and sold a home in a popular suburb here in Indianapolis. The elderly homeowner had built it originally in '03, and we were going to sell it in 2019. So he had lived there for 16 years. And as I was doing my research before I listed the property, which is part of that, is reviewing the tax information that is available on the property, I noticed that the taxes that he was paying on the property was $10,000 a year, which seemed pretty high. Taking a closer look, I discovered that he had never filed for or been granted a homestead exemption or a homestead property tax deduction on the property. For that matter, he didn't have a mortgage deduction either. Now, a rule of thumb here in Indiana is if you have and take advantage of a homestead and a mortgage tax deduction, it will cut your property taxes approximately in half. So I mentioned this to the homeowner, and he informed me that nobody had ever advised him that there was such a thing as a homestead exemption, or excuse me, a homestead deduction or a mortgage deduction for that matter. And obviously somebody didn't do their job, but make a long story short, he was paying $10,000 a year for 16 years when he only had to pay, if he'd had those deductions, half of that, $5,000 a year for 16 years. So if you do the math, he would have saved about $80,000 over the course of those 16 years if he had had the homestead and the mortgage property tax deduction. So that's why you need to be informed and take advantage of these deductions that may be available to you. I know, it's kind of an ugly story, right? Obviously, he was a little distressed at the thought of having lost $80,000. So knowledge is power. Be sure you're familiar with all of the property tax deductions that are available and whether or not you qualify. For example, for the homestead tax deduction, you have to own the home, of course, and it has to be your principal residence. So in this example, a vacation home wouldn't be eligible for a homestead tax deduction. If you own multiple homes in the state of Indiana, you can only use it on one property, and that has to be the one that you consider your principal residence. Mobile homes and manufactured homes, in most cases, are also eligible for a homestead tax deduction. Mortgage tax deduction, pretty straightforward. If you're carrying a mortgage on your property, you're probably eligible for a mortgage tax deduction. If you are or you soon will be purchasing a property, when you get to the closing table, the person closing the transaction for you will, in all likelihood, address some of the property tax deductions that you might be eligible for, and in many cases, they will file the paperwork necessary for you to take advantage of those tax deductions, and that's super important. You have to make sure that that issue is addressed, either at closing or before. If the closer doesn't bring it up, you should feel free to ask about it, or ask your real estate agent if you're working with one. If they don't know the answers to some of these property tax deduction questions, they should be able to point you to a resource where you can get all the information that you need and get the necessary paperwork in place for you to take advantage or to file and to take advantage of some of these property tax deductions. So very important. Don't be bashful about bringing those topics up. If you're already a homeowner and you don't have a homestead tax deduction and or a mortgage deduction, if it's applicable, you need to do a little research to find out how to go about getting a homestead tax deduction. Now, you have to be eligible, you have to own the home, as I mentioned, and it has to be your primary residence. If it is, in fact, and you're not taking advantage of those tax deductions, you're paying too much money. So check it out. It is certainly worth your time. I've provided some links below for you to take advantage of to find out who your tax assessor is, and some of the application forms, links to the application forms for property tax deductions. And be aware that you're probably going to have to provide some paperwork. For example, your closing statement when you closed on the property, if you already own it, and a copy of the mortgage contract if you're applying for a mortgage tax deduction as well. And of course, picture ID. If you're an existing property owner and you've recently refinanced, be aware that there are times when these property tax deductions don't necessarily transfer over to your property after you've refinanced. So you need to make sure that, in fact, you still have all of the deductions that you had before refinancing. So it always pays to double check. Hey, and I've provided links down below, as I mentioned, for you to take advantage of. There's a PDF document that lists all of the deductions and what it takes to qualify for some of those deductions. Just a lot of good information about them. There's also links to state resources that will give you information about who your county officials are that you may need to contact to make sure you're getting all of the tax deductions that you're due. Also state links to forms that you may need to apply for those property tax deductions. So take advantage of some of those. Hey, I hope you found this video informative and worth your time. It wasn't meant to be an exhaustive discussion about property tax deductions here in the state of Indiana. It was meant to get you thinking about them, though. If you're an existing homeowner or you're about to become a homeowner, you need to be aware of some of those deductions and whether or not you might be eligible to take advantage of some of those and reduce your property tax liability. But if you found it informative, be sure to hit that subscribe button and the notification bell down below. It is very much appreciated. And remember, if you're moving into central Indiana or the Indianapolis metro area, or you're already here and thinking about making a move, upsizing or downsizing, whatever it might be, I'm your guy. You can call me, you can text me, you can email me. Just reach out, make contact. I am more than happy to help. So I will see you on the next video. Take care.